Welcome back to Enriching Bankers. We are going to discuss about KYC policy. Genesis of KYC. Why the term KYC is generated? What is the necessity of KYC? What are the reasons for genesis of KYC? There are two reasons. First one, practice of introduction. Second one, preposition of customer due diligence. Coming to the first reason, practice of introduction. In 1970s, while banking industry was expanding and negotiable instruments were being introduced, practice of introduction was a routine process. During that period, bankers used practice of introduction was a routine process. Bankers used this practice of introduction was a routine process. What is the practice of introduction? Bankers used to ask an introducer before accepting a person as a customer. During that period, bankers used to ask an introducer before accepting a person as a customer. Who is an introducer? Introducer may be an existing customer, may be a well-known person to the banker, may be a reputed person in the society. Why bankers used to ask an introducer? Because they don't know about a new person. They don't know about how that new person can handle banking instruments. They don't know about how that new person can use banking products. That's why they used to ask an introducer before accepting a person as a customer. That's why this practice was becoming the basis for the establishing a bank and customer relationship. Because of that, practice of introduction became the basis for the establishing a bank and customer relationship. But new persons thinking was different to the bankers. New persons used to think that they are putting their money into the bank. Why should they request another person to introduce them? They are putting their savings into the bank. Why should they request or beg unknown person to recommend them? That's why they hesitate to maintain a relationship with the bank. That's why they do not want to establish a relationship with the bank. This became the blockage for the expansion of banking industry. This became a big problem for the banking industry expansion. That's why practice of introduction became one of the reasons for the genesis of KYC. That's why KYC was introduced. Coming to the second reason, preposition of customer due diligence. We can say it as a proposal of customer due diligence. Who made this proposal? FATF made this proposal. FATF stands for Financial Action Task Force. In 1990, FATF made 40 recommendations. In those, customer due diligence was one of the important recommendations. Why did FATF make this proposal? Money launderers misutilizing the banking products. for their transactions by hiding their activity to avoid abuse of banks by money launderers and to know more about the customers and their activities. FATF made this customer due diligence proposal. Later in 2001, BCBS published detailed guidelines on customer due diligence. Purpose of the KYC. What is the purpose of the KYC? Weed out undesirable customers. Undesirable customers in the sense criminal background customers. So, weed out undesirable or criminal background customers and protect good customers. Make banking operations safe and clean. Provide comfort and confidence to the bankers and customers to conduct their business. Weed out undesirable or criminal background customers, protect good customers, make banking operations safe and clean, provide comfort and confidence to the bankers and clients to conduct their business. Need for KYC policy. Why banks need KYC policy? FATF made recommendations or guidelines on KYC policy to all its members. So FATF made guidelines on KYC policy to its members. As a member, India should also made PML Act or PML guidelines on the basis of FATF guidelines. These guidelines means these PML Act, PML rules are very onerous, are very hard, are burdensome to the banks because these PML rules are enterprise-wise applicability. These rules are applicable enterprise-wise. That means if the bank does mutual fund business, then they should follow the guidelines given by the SEBI. If the bank does insurance business, then the bank should follow the guidelines given by IRDA. So that's why it is called PML rules are applicable enterprise-wise. Enterprise-wise. To make it simple, RBI issued master direction or know your customer direction in 2016. According to that direction, all banks should frame their KYC policy. According to the master direction given by RBI, all banks should frame their KYC policy, and that KYC policy needs to be approved by board of directors of that bank. So RBI advised that all banks should frame their KYC policy, and that KYC policy needed to be approved by board of directors of that bank. Next, periodical review. What should be reviewed periodically? KYC policy should be reviewed periodically. Why KYC policy should be reviewed periodically? Money launderers search new ways, new methods for their transactions by hiding their activities, misutilize banking operations. Money launderers search for new ways and new methods for misutilizing of banking operations, for trapping of bankers, for trapping of banks, for their transactions by hiding their activities. FATF regularly observes money launderers' activities and transactions. So, based on the activities and transactions of money launderers, FATF regularly make amendments or modifications to their guidelines, to its guidelines. FATF regularly make amendments to its recommendations based on the activities or transactions of money launderers. So, to align with international guidelines made by FATF, PML Act and PML rules should also be amended or modified or changed. So, to implement these changes, RBI advised the bank's board that that their KYC policy must be reviewed at least once in a year by incorporating all the changes pertaining to guidelines. FATF regularly make amendments or changes to its recommendations based on the activities or transactions of money launderers. To align with those modifications, PML Act or PML rules should also be amended. To implement those amendments given or suggested by PML Act or PML rules, RBI advised the bank's board that their KYC policy must be reviewed at least once in a year by incorporating all the changes pertaining to the guidelines.